Wow. The timing of these sources you sent is pretty wild.
Oh, yeah.
Yeah, Bitcoin's been like on a roller coaster ride downwards lately.
Right.
And I'm sure anyone even remotely interested in crypto, whether they're, all in or just kind of watching from the sidelines, is feeling a little uneasy.
For sure.
So today, we're going to take a deep dive, really dissect what's going on beneath the surface, beyond just those attention-grabbing headlines.
Yeah, I mean, there's always so much noise, right?
Yeah.
Especially when the market gets shaky.
Absolutely.
And, it's easy to get swept up in all the panic and the hype. But that's why I think, deep dives like this are so important.
Totally.
You got to cut through all that clutter and really focus on like the actual data, the actual developments, and what they're telling us.
Exactly. So what we have here is a really interesting mix of stuff, like market analysis, some, pretty significant changes happening in terms of regulation, and even a glimpse into some really cutting-edge tech advancements.
Yeah, it's a lot to unpack.
It is. But our mission today is to give you a comprehensive but also like a manageable overview of all of it, drawing from, all this material you've been kind enough to share with us.
Awesome.
So the main source you sent over is an audio recording from Blockchain DXB dated March 31st, 2025.
That's right.
And, it really gives us a broad perspective on a ton of things. Global market sentiment, U.S. economic factors, regulatory news, the exciting stuff happening in Dubai's, like, blockchain and AI world.
Yeah, it's a real snapshot of what's going on.
It really is. Okay, so right off the bat, the source jumps into the overall mood, the vibe in the cryptocurrency market.
Right.
And it mentions that the alternative.me index is at 34, which apparently indicates a sentiment of fear.
Not good.
Not great. So I guess that kind of sets the tone for everything else, wouldn't you say?
Yeah, I mean, it does suggest that, people in the market are feeling a bit apprehensive, probably because of the recent price drops.
Right.
You know what's really interesting here, though?
What's that?
It's the speaker's take on why this fear is so prevalent.
Oh, okay.
It's kind of a classic debate in finance, fundamentals versus sentiment. To what extent do those actually drive prices?
Right.
So while the speaker highlights one particular perspective, if you look back at history, market downturns often kind of amplify negative news cycles. It's like a self-fulfilling prophecy.
It's that whole, like, doom and gloom, everything's falling apart thing.
Exactly.
Okay, so the speaker in the audio is pretty vocal, let's say, about their frustration. They're basically saying that despite all the positive economic signs they see in the U.S. under the Trump administration, they specifically mention lower inflation, based on past data, and a strengthening labor market. The mainstream media is just pushing this relentless negative narrative, and that, they believe, is the real culprit behind the crypto price drops.
It's an interesting argument. It really highlights how there can be this disconnect between what some perceive as positive economic indicators and how the market actually reacts. Yeah. And that reaction is often driven by media coverage, by sentiment, which is, especially relevant in a market as dynamic and sensitive as cryptocurrency.
Yeah, I mean, it makes you think about, like, the power of the story, right?
Oh, absolutely.
Like, regardless of whether everyone agrees on those positive economic indicators or not, the way information is perceived and spread really does influence how investors behave.
100%.
Okay, then they kind of switch gears and start talking about what they consider, like, hard evidence of positive economic news under the Trump administration.
Okay.
And they throw out some pretty huge numbers, like nearly $5 trillion in investment pouring into the U.S. and the potential for, like, $1 trillion in government efficiency cuts.
Wow.
Adding up to a possible $6 trillion benefit. So, they're basically saying that this positive news should be carrying more weight than any negative narratives, and therefore, crypto prices should be reflecting that.
Makes sense.
Right. But their frustration stems from, like, what they see as the media just ignoring these figures.
Interesting.
They're like, why isn't anyone talking about all this investment coming in?
It's a good question. And I think it reflects the reality that, different media outlets focus on different stories, different angles.
Oh, totally.
And that can lead to totally different perceptions of the overall economic picture.
Exactly. Okay, let's shift gears a bit and look at the actual cryptocurrency market snapshot as of March 31st, 2025, according to this source.
Okay, sounds good.
So global market cap was $2.67 trillion, which was down. Bitcoin's market cap was $1.63 trillion, also down. And Ethereum's was $217 billion, with a note that it could potentially dip below 200 billion.
Yeah, those numbers paint a pretty clear picture of the market's valuation at that specific point in time.
Uh-huh.
And, they confirm that downward trend we were talking about earlier.
Right, right.
But, it's important to remember, these drops aren't just numbers on a screen. They represent a significant amount of value leaving the market, which can have a real impact on liquidity and investor confidence, at least in the short term.
Oh, definitely. And the fact that they specifically mention Ethereum potentially falling below 200 billion, like that suggests a real concern about its performance at the time.
For sure.
All right, 24-hour market volume was $48.14 billion, down a hefty 23.21%.
Whoa.
That's a pretty substantial drop in activity. What's your take on that?
Well, it typically means there's less participation in the market, which often goes hand in hand with falling prices.
Makes sense.
Investors get a bit more cautious.
Absolutely. So let's zoom in on decentralized finance. DeFi volume was $4.01 billion, which was a little over 8% of the total. The total value locked TVL was $92.51 billion, with Lido kind of running the show at almost $17 billion. Anything jump out at you there?
Well, the fact that DeFi volume was a relatively small percentage of the total trading volume could mean that people were moving away from decentralized exchanges and maybe heading towards more centralized ones during this, period of uncertainty.
Right.
And Lido's dominance in terms of TDL shows that staking was still going strong within the DeFi space.
Interesting. Now, here's a bit of a counterpoint. Decentralized exchange, or DX, dominance was actually up at 29.04%. And the source points out that the increase in DX volume during price drops might mean more people are turning to DXs during times of volatility.
Yeah, that's a key observation.
Yeah.
It could suggest that when prices fall, some users prefer DXs because they offer more control over their trading, or maybe they see opportunities in less liquid markets.
Right, right. So stablecoin volume was $45.95 billion, which the source notes is low.
Okay.
But it also represented over 95% of the total volume, with USDT in the lead.
That seems a bit contradictory.
Right. High percentage, but low overall volume.
Yeah, what that tells me is that most of the trading that is happening is concentrated in stablecoins.
Okay.
But the low overall volume suggests there isn't much buying power coming in to, offset the selling.
So it's more about people moving into stablecoins as a safe haven rather than using them to buy other cryptocurrencies.
Exactly.
Makes sense. Okay, let's talk meme coins. Always a fun topic. The top ones by market cap were Dogecoin at $24.74 billion, Shiba Inu at $7.32 billion, Pepe at $2.90 billion, Trump, assuming they mean the meme coin, at $2.03 billion, and Bonk taking a bit of a beating down to $870 million. Still pretty big numbers for, what are essentially internet jokes.
It's crazy, right? I mean, it just goes to show the power of community and social media in the crypto world. Even during a downturn, these meme coins can hold on to significant market caps.
Yeah.
But like we saw with Bonk, they can also be super volatile. It's kind of mind-blowing to think that something that started as a joke online can be worth billions.
It's wild. Really highlights how unique and unpredictable this space is.
Totally.
All right, let's look at some individual cryptocurrency price movements from that date. Bitcoin was at $82,023, down a bit in 24 hours and about 4% over the week.
Okay.
Ethereum was at $1,798, down more significantly, almost 10% for the week. But the one that really threw the speaker for a loop was XRP at $212, barely down in 24 hours, but down over 12% for the week. And they specifically mentioned being confused because, according to them, the Ripple SEC case had been resolved.
Yeah, I can see why they'd be puzzled. I mean, if the case was resolved favorably for Ripple, you'd expect XRP to be doing better.
Right.
The fact that it was down so much suggests maybe the resolution wasn't as positive as everyone thought, or there were other things happening in the market that kind of overshadowed any good news from the legal side.
Right, right. It's a good reminder that even when seemingly good news comes out, it doesn't always translate into instant price jumps.
Exactly.
Okay, now we get to what the speaker calls a misleading article by the Associated Press.
Oh.
Yeah, the title is, U.S. Consumers Remain Cautious About Spending Last Month as Inflation Ticked Higher.
Okay.
And the speaker is basically saying this contradicts the CPI numbers showing inflation going down, based on the past data they mentioned earlier under the Trump administration.
I see. So they're pointing out a potential discrepancy between different economic indicators and how the media is interpreting them, which is super important because inflation can be measured in different ways. And different indices can show slightly different trends.
So the AP article got its data from the Bureau of Economic Analysis, the BEA report, not the Bureau of Labor Statistics, the BLS report, which the speaker considers the main source for inflation data. It sounds like they're implying that the AP used a less reliable or less relevant data set to support their headline.
Well, there's often debate about which inflation metrics are the most useful.
Right.
The BLS's CPI is widely followed, but the BEA's Personal Consumption Expenditures Price Index, or PCE, is also a key measure.
So it's like two different ways of taking the temperature of the economy, essentially.
Yeah, exactly. They both tell us about inflation, but they're looking at slightly different things.
Okay.
So sometimes they might give slightly different readings.
Got it. Now get this. The speaker says they used a bunch of AI platforms to analyze the AP article and the BEA report, ChatGPT, Grok 3, Google Gemini, VenusAI.
Wow, that's a lot of AI.
Right. And they claim that all of them agreed that the headline didn't match the report's content.
That's fascinating.
Right. I mean, it makes you wonder.
It does. It really speaks to the potential role AI could play in analyzing and interpreting news and data. But of course, we have to remember that even AI interpretations can be nuanced. They depend on the specific prompts and data you feed them.
Of course.
So it's not a foolproof system.
Totally. So the speaker's conclusion is that the AP article is just one interpretation, not necessarily the whole truth, and they encourage listeners to, read the full report for themselves.
Always good advice, especially these days when we're bombarded with information.
Exactly. Going straight to the source is always the best way to get a clearer picture.
100%.
But wait, there's more.
Oh.
The speaker points out that the same author of this supposedly misleading article, Chris Rugaber, published another article on March 12th stating that U.S. inflation had slowed, and that one apparently did use BLS data. So the speaker sees this as a contradiction.
Yeah, it does seem a bit contradictory at first glance.
Right.
It's possible the author was just reporting on different data sets or time periods,
That's true.
which could explain the seemingly opposite conclusions. But it definitely underlines how complex economic reporting can be and how important it is to pay close attention to the data sources and timeframes.
Absolutely. Okay, let's move from potentially bad news to some good news, at least from the speaker's perspective.
Okay.
They're talking about new guidance from the FDIC, FIL 725, which they see as a reversal of previous crypto banking policies under the Trump administration.
This is a big deal. It suggests the FDIC is becoming more open to banks engaging in crypto-related activities.
Right, and the fact that FDIC supervised banks can now get involved in these activities without prior approval, that could really make it easier for traditional financial institutions to enter the crypto space.
For sure.
And the source lists a whole bunch of these activities that are now allowed: acting as custodians, maintaining stablecoin reserves, issuing crypto, market making, participating in blockchain settlements, performing node functions, staking, and lending.
Wow, that's pretty comprehensive.
Right. It seems like they're really embracing the crypto ecosystem within the traditional banking world.
Yeah, but the guidance also stresses the importance of risk management and working with other regulators. So it's a more permissive stance, but they're still being cautious.
Got it. Another bit of news related to President Trump that they bring up is the pardon of the BitMEX founders, Benjamin Dello and Samuel Reed.
Right.
They were facing charges related to money laundering and violations of the Bank Secrecy Act.
Yeah, presidential pardons are always interesting. In this case, it shows a certain level of leniency towards people who've had legal troubles in the crypto industry. But what it means for the bigger regulatory picture, who knows?
Totally. Now, some not so good news for some. The source talks about Mark Novogratz and Galaxy Digital having to pay a $200 million settlement to the New York Attorney General.
Ouch.
Yeah, apparently over alleged misrepresentations about Terra Luna before its, epic collapse. And get this, Novogratz even had a Luna tattoo.
Seriously.
Yeah. Which just goes to show how much faith some people had in that project. Makes the whole collapse and the settlement even crazier.
It really does. And it reminds us that people and companies can be held accountable for promoting crypto projects, especially if those projects fail and investors lose money.
Totally.
The allegations of misrepresentation and the new rules about public statements, it all points to increasing scrutiny in this area.
Okay, let's completely switch gears now and talk about what's going on in Dubai's blockchain and AI world, based on the source.
Okay.
First up, a blockchain initiative between IBM and Dubai Customs, along with some other partners.
Uh,
They're looking into using blockchain for import and re-export logistics. Yeah, using Hyperledger Fabric on IBM Cloud. Sounds pretty ambitious.
it is, but it makes sense considering Dubai's goal of becoming a global blockchain hub. And using Hyperledger Fabric suggests they're focusing on a more controlled, private type of blockchain,
Oh, okay.
the kind that businesses often use for supply chain management.
So not just anyone can join and see what's going on.
Right.
It's more about specific organizations having access.
Exactly.
So the goal is to make trade finance operations more efficient, transparent, and secure.
Makes sense.
And they're even using IBM Watson IoT for data validation, so they can get real-time updates and automate things through smart contracts.
Pretty cool stuff.
It is. But the speaker in the audio is not a fan of Hyperledger Fabric.
Oh.
Yeah, they call it a permissioned blockchain and basically say it's just software, not a real blockchain.
I see. So they're coming from the perspective of those who believe in open, permissionless blockchains,
Right.
where anyone can participate and there's no censorship.
Exactly.
It's a fundamental difference in philosophy within the blockchain community.
Yeah. So the speaker's viewpoint really highlights the clash between these two approaches to blockchain technology.
Totally.
Okay, second Dubai news. The Dubai Data and Statistics Establishment is partnering with BlueGen AI.
Okay.
They're focusing on improving the accuracy of labor force surveys using synthetic data.
Interesting.
Yeah, sounds like a pretty innovative use of AI.
It is. Synthetic data is basically artificial data that mimics real-world data but doesn't contain any sensitive personal information.
Right.
So it can be a great way to improve accuracy and privacy in statistical analysis.
Exactly. And in this case, the aim is to make those labor force surveys more precise, protect people's privacy, and get better insights for economic and social analysis.
I think so.
It fits in with Digital Dubai's push for digital transformation.
It does.
And it seems like they're really focused on finding that balance between, data-driven progress and legal, cultural, and privacy concerns, which is super important when using AI in sensitive areas.
Absolutely.
And, the source mentions a study that shows synthetic data can accurately represent unemployment trends without sacrificing accuracy.
That's a big deal because it means synthetic data could be a viable alternative to using real, potentially sensitive data.
Right.
So you can do robust analysis while still following privacy rules.
Awesome. Well, we've covered a lot of ground here. To sum it all up for you, the listener, some of the key takeaways from this deep dive are, first, the huge influence media narratives have on the crypto market.
Definitely.
Second, those significant regulatory changes happening in the U.S. regarding crypto and banking. Third, all the exciting tech developments in Dubai's blockchain and AI scene. And finally, the fact that there are often very different opinions and interpretations within the crypto space itself.
It's a complex and ever-changing landscape. You really have to understand all the factors involved, market sentiment, economics, regulations, technology, to navigate it successfully.
Absolutely. So, here's a final thought for you to ponder. Given how powerful narrative seems to be in the crypto market, even more powerful than facts in some cases, what can you do as an individual to make sure you're making smart decisions based on solid information, not just reacting to the latest headlines?
That's a great question.
Or, thinking about all the advancements in both permissioned and open blockchain technologies, what future applications do you think will have the biggest impact on society? We encourage you to dig deeper, do your own research, and always, always think critically.
Couldn't have said it better myself.
Thanks for joining us on this deep dive.
My pleasure.